Welcome to Trading Lounge and the US indices for Thursday, October 21st, and starting with a Russell here. So we're working this particular triangle pattern. As I mentioned before, it's pretty complicated. I don't know if I've got it right. What I'm looking for is support on the 2,300. So it's heading in the right direction, but if you've got another count, doesn't mean that you're wrong and I'm right. So all I'm looking for, I'm just a simple person, so I just need to see, this is all I want to see, is just this little pattern here. And then we can go long from this point. We're already long, but that's the safe trade at that point, and then that will just take us straight up to it'll move quite quickly from that point. Once it's broken free of this cluster, it will move to the 2500 area pretty quickly, and later on this will become the support for anything that occurs across the level here. So the arrival, the reaction, the first high above the level, some sort of ABC correction back for support, and then up again from that point, if that's going to be the case. So we'll see. Let's have a look at the tick chart and get a bit of detail here. So this is our triangle pattern. It's a bit messy, but probably need to bring in more data. But so we come down for the ABC for the A wave, the B wave, ABC for the C wave, and ABC for the D wave there. And then it gets a bit tight in here, but the pattern seems to be cool, good. An ABC for the B wave and an ABC for this, all of this here. So we're looking for it to move off. Now, I've got this as wave 1 here and 2 here. I can have it, I can have it as I can counter different ways. I can even put wave 1 up here and wave 2 here because it's pulled back quite deeply. So there are different ways to count this here. I've understood that. We have moved above the 61.8% mark here. So we've got that, we've got the failing zone as the support at this point. We still need further confirmation. It doesn't mean that, you know, we'd like to see it take that top out there. If it takes that top out there, very basically would have 1, 2, 3, 4, and 5. If it takes that top out, it takes it past a 3-wave move. So just nipping that top out there would turn it bullish. And then we can look to see how we can count it as 1 and 2 and 3 and 4 and 5, or 1 and 2 and 1 and 2, or 1 and 2. It's just different ways to count it. I'm not that fussed about this at the moment. I want that top to be taken out, and we want support set up over here for that, and then we're on our way at that point. Okay, for the NASDAQ and the S&P, our bias is that the WXY, the wave 4, is completed. It could also be a wave 4 of a smaller degree because it didn't pull back to the 38.2% retracement level. So it's just another little puzzle that needs solving along the way. The move up through here, if we keep this wave 4 here, it's possible to look at all of these as a corrective move to the upside, and then another move to the downside here. That's all sort of possible, and this is the 61.8%, and that's the 78.6, the square root of 61.8%. So the old highs here, it's a nice place for it to fail. We would expect it to stall and correct a little bit at that point there anyway, so no point in panicking. But if it was going to fail, then this is where it was going to fail, and it's not like we've got it's not like we've got 5 waves up to the 61.8% or the 78.6. We don't have that 5 waves. We've got a wave 1 and 2 and 1 and 2. You could maybe even put all that together as wave 1 and 2 here and 3, but whichever way you look at it, it can be counted corrective. That's what I'm trying to say. So it's possible for it to fail here. The S&P's got another little high to make, so maybe there's another little high here. I'm not quite sure. I have to go and check it out. But yeah, so this is the area to be careful, but to also understand at what point do we move past that and we can go long. Now the S&P 500 is trading somewhere a bit higher in reference to the old high. But one of the odd things that I've seen is the FTSE, the UK market, the FTSE 100, it's taken that top out here. So that's the first one out of the pack. Well, there's probably others. I haven't looked around that much, but from the indices that we cover, the FTSE's taken that top out there. So it's just a little subtlety thing, and it just tells me that, well, this is why the bias is on wave 4 being completed here, and this is a secondary situation here, but one that we can't ignore, and we need to just be mindful of it until we move past it. That said, let's go in and have a little squizzy at this. So this is pretty much the stock standard sort of count with stocks as well. I think it's only Facebook that's actually got this sort of 5-wave structure up off the low. All the others have got 1 and 2 and 1 and 2. We could probably drag this one and put it here and look at all of this as one, but don't need to do that just yet. So there's a few things like that that could be reorganized, but I think that the count up here is the one that we've really been looking for. First of all, it doesn't look corrective because it's really moved out a long way. With corrective patterns, there's normally some sort of equality between the A wave and the C wave. And in this case, you know, we could, if we looked at all of this as the A wave, this is probably 61.8% of that. So you could probably squeeze that sort of thing in and get away with it. But anyway, the main point is we just need to be, and I've been harping on all week about it, but this is the area that we need to be careful. Now, I think that the S&P needs to make another little high here. That may be the case here as well, so we just need to be a bit mindful of that. But yeah, that's kind of where we are. If this is correct here, then you know, we'll be taking out this top. Yeah, just need to be a little bit mindful of a few things. Let's just cruise in and check on this a bit further. So this was our counting yesterday. We had a couple of long trades in here. We talked about taking some money off the table. Still plenty of time to do that, even though it's a little bit lower here. From that low to that high, this little line here is the 38.2% retracement level. We could also take the wave 4 of 1 lesser degree here, roughly speaking, and put that there. That would also sort of suffice. That would be the natural pullback for this market, but it is traveling very strong, so it's unlikely to pull back, but I have to put the flags in the ground. Also with the S&P 500, just to let you know that the S&P's still got another little move to go up here, so I may have this wrong in here, and then we could have our ABC here. So there's a couple of things here. It looks sort of okay at this point. I don't know if I've updated the tick chart. I'll just have a look. I need more data. Okay, so 1 and 2 and 3 and 4, and then all week we've been counting this up. Let's drag that across over here. I mean, here on the tick, this is really small here. But it looks like a nice ABC pattern to me here, you know. But like I said, I think that I think I've got something wrong somewhere, because this looks impulsive up here. Let me just check this. 1, 2, 3. So that's going to be, let me just do this way, the old-fashioned way. 1 and 2 here, 1 and 2. I'll have to put that as as 1, 2, 3, 4, and 1, 2, 3, 4, 5. I have to put all that third wave. That's got to be the fourth wave. I wonder if that's the A, the B, and the C here for that. And the fifth wave here. Well, as far as I can see, there's no reason why we can't go long above that high there for that. Because this is looking corrective and this is looking impulsive, but this wave 4 is too small, you know. So when I go back out to, just go back to my 1 hour chart for a moment, I mean, it's just way too small. Do you know what I mean? It's just way too small. So it looks, but I can see that it wants to travel further. So maybe I've got to put this over here. We'll go and have a look at the S&P and we can come back and mull this over here. But I think I've counted everything right here as 1 and 2 in here and 3 and 4 to here, then 1, 2, 3, 4, 5. So I think I've done everything right. Yeah, let's just go and have a look at the S&P for a moment. So I'll start from the outside. Instead of having this wave 4 here, I've got 1 degree smaller. But that still needs to be resolved a bit further. It'll get resolved in its own time, of course, as well, and it hasn't really caused us any sort of problems. I feel like we've done quite well in this whole trend, really. You know, all of this here, picking the low down here and, you know, being long on the 2.5 here, we've counted all this up reasonably well. There's been a few headaches in all of this, of course. Some of it's been a little bit tricky, but still, we've been pretty much on the right side at the right time, so that's all good. And look, as far as this being, I mean, one of the reasons that I first sort of, well, there's a couple of reasons, but the reason I don't like this particular wave 4 is because it didn't pull back to its 38.2% retracement level down here somewhere. It could still do it. It could still, you know, make a new high here and then do something like this and, you know, then move up through there and expand and flatten A and a B and a C, as we were talking over here yesterday. But I don't think that's the case. The FTSE has really sort of moved along nicely, so that's sort of helped, and this is quite close to the top, so it's all good. But we don't have a nice 5-wave move off the low here. We have 1 and 2 and 1 and 2 here, which could just be an A and a B and a C wave up to here. Do you know, that's the point that I've been talking about all week. Let's just go in and see where we are with this. So yeah, first of all, that can be the X wave up here after this 1, 2, 3, 4, 5 finishing here, and yeah, 1 and 2 and 1 and 2 and 3 looks sort of all okay. So we're looking at this wave 3 here now, and then this wave 4, that's roughly the 38.2% retracement level, or the wave 4 of 1 lesser degree. So yeah, that's sort of where we are at the moment, and let's go in and understand this trend a little bit better. So from the low here is 1 and ABC for 2, up for 1, back for 2. So just to let you know that on the cash market, it appears that this is the low, but I like using this as the low here because we've got such a nice A wave, B wave and C wave here, and this is impulsive here and this is corrective here. So I've got it running from this point, wave 2 here, and then 1, 2, 3, 4, 5, the third wave, fourth wave, and then we're moving up here for this. So I might just go to the tick chart here so we can just see a little bit more data, but I'm thinking that we're close to a top, we're just not quite there yet. And this pulling back to the wave 4 of 1 lesser degree is such a long way for a strong market, so it probably won't do that. If it's going to do anything, let's just say that it pushes up. Would it do that much? Be something like that. Anyway, it's something that we have to track and negotiate with all of this, but let's just go to the tick chart. The next level here is 45.50. That's probably where that will go to if it's going to go up. but let's just check it on the tick chart. We're very close to the close, so it's all going to be a little bit rough and ready. Okay, so let's get a bit of data in. So we've got our little journey from the low here of 1 and 2 and 3 and 4, so we just focus on that. We've got half a trade here, a trade here. We're looking to get back in over here with this wave 4 here, so I'll put that just there. So let me just go back over this a little bit here. So we've got 1, 2, 3, 4, 5 for 1 and 2. 1, 2, 3, 4, 5 for 1 and 2. 1, 2, 3, 4. A bit of an extension here, but we can run with that. So that's 3, and then that's that wave 3 is a bit weird there. I think that's a bit of a problem. That wave 4 is just a bit small. I'm wondering if this is all 1 and 2 and 1 and A and a B and a C here for the 4, and then the 5. But the problem I've got here, not the problem, but the situation here is from this high here, and you can see that this move here is in 3 waves. It may be the A wave and the B wave and coming down for the C wave. That would be nice. 1, 2, 3, 4, 5. That would be a start for that larger move. But that move there is telling me that we need to take that top out there. And that's 1, 2, 3, 4, 5. That's 1 and 2. That's still on. Okay, 1 and 2 and 3 and 4 and 5. That's right. Yeah, I don't have 5 waves here, so that's a bit of an issue there. And that wave 4 is a bit small. Have I made a mistake in here somewhere? 1, 2, 3, 4, 5, 4, 5. Is that some sort of truncated 5th wave there? What's on the other side of that? Yeah, that could be the issue. That could be part of it. That's just too small. It kind of needs to go over here for that. Don't know. I'll just copy it for a moment. Okay, well, let's just see how this plays out here for this. So we're either going to start this wave 4, which is probably likely looking at the NASDAQ, but the worst situation that could happen here is not the worst, but looking at this as 1 here and A, B, C for 2 here, and then 3, 4 and 5 here, and then we start this ABC pattern here, but that would throw it out from the NASDAQ. So the takeaway here is that we're bullish. We're at the 78.6 mark, so it's going to hold the market a little bit. Yeah, so it's just a bit of it's going to be hard for day traders if I don't get this sorted out. Let's just have a look at the NASI again here. Well, the NASI's making a bit of a move here, which is good. Let's just go in and check that on the tick chart. First of all, we can drop that down to here now because that's in 3 waves here. Not quite 5 waves here. That might drop down here a bit further. Yeah, I don't know. I need to ponder it, and I feel under pressure because I got to not get the video out there, but just wasting people's time. So let's go back here for this. I mean, it's difficult to trade against the, to pull against the trend. So you've got to be really careful, and you have to be sure that, that you're moving. And I just can't see it coming down because we've got that 3 wave move here, I think we're going to end up at the 4550 area and then pull back from there. sorry, I can't resolve it. Let's just go back to the bigger picture here and just get a bit of perspective on this then. I mean, it's on the close at the moment, so we can't really worry about too many things. So the situation is that it's possible for it to push to, based on that little move in here, it's possible for it to push to the 45.50 area and then correct. It's also possible because of the NASDAQ, we've got the top in play here already, and we come down from that point. Look, the other point that I want to make here, sorry to drag it on a bit, but just on thinking, it's Thursday today. So Thursday is normally the bear day in in the bullish weekly cycle. So let's just see what Thursday delivers. And the normal thing is that at the end of the session, not at the end, but in the afternoon session, I mean, I'm in Australia, so you got to think of the US in its own way, but the end of the session, if this starts to correct, we're looking for a correction. As I mentioned earlier in the week, we're looking for Thursday for that to occur. Markets get a bit choppy Wednesday, which we're seeing at the top here now. So Thursday being the bear day. If we do get Thursday as the bear day, then it should start to tighten up in the afternoon session. So look for strength in Thursday afternoon. And if you can build in a few little positions, if you feel that it's, starting to impulse to the upside, and then look to build on that, through the evening in the futures market or whatever, and through Friday morning, Friday afternoon, Monday morning, and just let it go from that point, because the profit taking will come in on the Tuesday, and that will see us probably coming into that fifth wave here at that point in time. So to capture this run here is what we're going to do. I think that we need to also be flexible about where this wave 4 could pull back. This wave 4 here didn't pull back to its 38.2% retracement level. So we know that we're in a strong part of the trend at the moment. So it only came down to 23. So if we look at the same thing here, just repeating itself, that might be a little bit helpful as well. So taking that, find the top there wherever it is, and then in this case here, it's just coming back to the 4,500, so that might just do that and bounce back. So I think what I'll do is that just say that Thursday is likely to be the bear market. We want to be looked to purchasing in the sort of later in the afternoon, and then Friday morning and so on, and catch this run to the upside. I don't know how far this will pull back. The norm is the wave 4 of 1 lesser degree, but looking at the fingerprint of this market, it's pulling back to the 23.6. So that's here. That's much closer to the 45 area. So just be mindful about that. So they're the 2 points, and we'll catch that run to the upside there. In terms of our trades here, we're just going to accommodate this wave 4 here. And we'll also look to accommodate some of this next move in this wave 4 as well here, because there's a few things. Yeah, no, it's pretty clear that this is 1 and ABC for 2 and 1, 2, 3, 4, 5. So that's clear as a bell. So I'll stay with that on the NASDAQ as well then. Okay, well, that's it. Okay, a bit to digest, I guess. So we've also, just to recap a little bit, we've got the situation about, at the end of this 5 waves here, realistically, this can be an ABC for the A wave, a B wave here, and a C wave up here, finishing this here, and that's our top, and we could come all the way down. So what we're trying to recognize, you need to get yourself into a safe situation while this Thursday is being the bear day. We need to study the Thursday, which we'll do tomorrow morning. At the end of the US session, rather. It's morning for me. We'll just see if we can figure out that it's corrective and it's finished and ready to catch this next run to the upside, if it's going to be there. But this wave C is the weak spot there. So 2 points. This can be a top of wave C. Unlikely, but it's possible. Secondly, Thursday, we're looking for a bearish day, and we want to buy in the afternoon and then hold through, build that through all of Thursday evening or whatever, and the Friday morning and the Friday afternoon. If the market's looking strong on Friday, we'll just keep feeding the beast, and you can go all the way through till profit taking Tuesday morning, and then the rest of it out on Tuesday afternoon, because it'll start getting choppy on the Wednesday again. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.